Today I'm going to show you guys how I passed this Topstep 150K combine in 2 weeks without full porting it, without gambling, or any of the other degenerate stuff that you guys might do. So let's go into the Topstep account to show you guys first. Look at that 150K Express. I don't have it on the copier yet, but we hit a little base hit today. As you can see, we just activated this, and that was because we passed it this morning. All right, so now that we got that out of the way, I want to talk about the strategy that I use for every single trade in this combine. So I'm going to break down this trading model in a second. Then we're going to go over some of the actual examples of trades I took to pass this combine. And then at the end of the video, I'm going to talk about how you guys should be approaching combines versus how I think a lot of you actually do. And so, yeah, that's going to be it. So the STIM model, that's what I call it. It's my 4-step trading process. It's a very simple model. Basically, to break it down really quickly, I want to see a liquidity sweep, okay? Now we're going to use an example of a long. So I want to see a swing low taken out. I want to see that liquidity sweep extend into a higher time frame bullish fair value gap, right? Because that's extra confluence. Now, if you were to flip this, you want to see a swing high taken out, tap into a bearish gap for a short, okay? Then once you're on your entry time frame, which for me happens to be the 1 minute, 2 minute, 3 minute, or 5 minute most of the time, that's where you want to look for a bearish gap to have been put in while you made that liquidity sweep, and you want to see it disrespected and inverted with good momentum. So typically, the more V-shaped recovery or more V-shaped downturn, the better it's going to go for you, okay? So that is the strategy. And like I said, these are all bullish examples. If you flip this all, it's just going to be how you would approach a short, okay? And for the fair value gaps, I typically mark them on the 30-minute, 1 hour, 4 hour, or daily. But sometimes if they're obvious and big enough, I will mark 5-minute and 15-minute gaps for this. And the first example is going to take us right to a 15-minute gap. Okay, so we're going to go into replay mode. And this was a long that I took last week. This is the day that I had, I think, over 3,000 in profit on the combine. I'll put the image up again. But basically, what I really liked about the setup, and this is very simple, right? So I'm just going to get right into it. You'll see how this relates to the model. So what do we have here? We have a massive bullish 15-minute gap. So this was one of those cases where I did want to use a 15-minute gap because it was very obvious, right? So we have this 15-minute bullish gap. We have a very obvious swing low inside of it. Now, let me tell you guys, when you sweep out a swing low inside of a bullish gap or sweep out a swing high inside of a bearish gap, it's very much worth paying attention to because they're often going to get reversals on this type of setup. So we have the sweep, right? And I'll just start labeling this out so you guys can really visualize. So we have the sweep. We have the tap, right? Because we tap into it right here. And then if you go once again onto my entry time frame, the 1 minute chart, you can see that we create a bearish fair value gap after sweeping liquidity right down here. Okay, and I'm going to delete the overall 15-minute one because it's going to ruin your eyes to look at both at once. So you can see that right here, we have this one. We also have this one, right? So you just count them as one typically because that's going to be easiest. So right here on this exact candle, once we invert, right, we close above it, I'm looking to target higher. Now, this day was pretty lucky because there were a lot of obvious swing highs. Okay, so we had this swing high up here, and then this beautiful set of relative equal highs right here. So when you see that type of collection of liquidity, right, that's a lot of buy side liquidity. A lot of stops for shorts are going to be placed up here, and a lot of people are going to chase long up there. So the market is going to want to gravitate towards that area, right? So if you just go back into replay mode on the 1 minute chart, you can see that we end up absolutely running up to the target. Now, this was an early morning trade. This was the 9:30 market open candle. So I actually ended up taking this at around 9 a.m., right? So sometimes I do get on early to chart for pre-market. And in this specific case, I realized, oh my gosh, this is actually a setup happening right now. Maybe I don't even need to wait till 9:30. And I didn't, right? We ended up running to the target. We got some really good delivery and continuation once the market actually opened for New York session. But this is just proof that these draws on liquidity work, right? We had very obvious relative equal highs right here, which if you guys don't know, if you have a set of two highs like this and the second one doesn't take the first out, they're going to be very strong areas for price to want to return to. So you can see that we just absolutely blast up to that, right? And obviously, we have the sweep, we have the tap, like I already discussed, we have the inversion, and you can see that it happens on pretty good momentum, right? We do have a little pullback, but clearly buyers are very happy to step in here, right? One, two, three pretty strong green candles in a row. Little base above, a little bit of consolidation, but we end up ripping. So that was the best trade of the combine, I believe, in terms of just how much I made that day on the combine. And I actually also took this on some of my fundeds with lower size because I wanted to be able to easily manage both trades at once, since you can't copy trade combines with fundeds. Now we'll go to this Tuesday trade example, which is really clean. I netted about 1,300 on the combine, and this was my last real trade that basically got me to passing. After that, I was kind of just micro scalping to make up the last bit of buffer there. But like I said, this was a very obvious and clean trade as well. So what happens? We have a 5-minute bullish gap from the other day that was pretty large and significant, and it had been holding us up, and it was also right near a swing low, right? So this is about a 30 plus point gap on NQ. So it's very significant in my mind still. And you can see that we had set up a low inside of it the day prior. So what happens right when market opens, we have a Judas swing to the downside, which basically just means a fake out move. So we have this Judas swing to the downside, right? We set an exact equal high right here. Notice how this wick does not take out the previous. And remember what I said about those guys. Remember what I said about how important it is to look for sets of relative equal highs if you're longing. So we have these relative equal highs. It's maybe one tick off, but the important thing is that this 930 candle does not take out the 845 high. Now, what else is a good target about these? Well, we have a bearish fair value gap right here and a set of equal highs inside of it. So this is going to be a very good target. So what happens? We come down, we sweep out liquidity. We tap into the bullish gap. Like I said, it's a 5-minute, which isn't as significant, but combined with the previous day low, which is very significant, and the fact that it was a wide gap for a 5-minute, I still wanted to take it into account. So now we see on the way down, what do? We create a bearish fair value gap on the 1-minute chart. So now we've swept liquidity. I'm just waiting to see if this gets inverted because I have a very clear target to the upside. What happens? Takes a few candles, but right here at 9:35 we invert it. So 9:35 is the inversion, and I think about 2 or 3 minutes later I end up hitting TP on this, right? So I got in at 9:35. I'm fully out at 9:39, right? Because what happens? We sweep liquidity, we tap into a higher time frame gap, we got an inversion with momentum, right? It's a pretty strong candle to the upside. We comfortably close above this. Even the little wick above, I don't love, but it's still a good enough momentum candle for me because the candle is bigger than the fair value gap itself. So the candle that we inverted the gap on is bigger than the gap itself, which is kind of important to me. So then we consolidate a bit and then just rip up to the target. And once again, this model is very, very easy and repeatable. Okay. That's what I use for all of my trades that I took during this combine. I passed it quickly and I use this model to take all those trades. And the biggest part about it, I think, is understanding that the model itself that I showed you guys, and I'll pull it up one more time again. So one thing about this model that I wanted to go over is that it is a very easy, simple, repeatable process to get to your destination. It's like a plane ticket, right? But I will say, what use is trying to look for plane tickets if you have no idea where you're trying to go, right? So what's the use of looking for the setup all over your charts if you have no idea what you're targeting? That's why drawn liquidity is so important, right? Because people, anyone could see this model and take it every time it ever appears, right? And you might have a solid win rate. You probably would, because I see it work more often than not. But it's not the be all end all. You absolutely need a draw on liquidity or logical target that is uncontested. Now, what do I mean by this? Obviously, previous day low was a strong draw on liquidity once we got down in this range. And we left this strong draw on liquidity to the upside to then later target for longs. However, if we had not taken previous day low and we had barely stayed above it, it would be unsafe to take a long up to these targets because you have no idea, okay, we're close to previous day low. That's a good target. That's a good draw. It would make sense for market to go down there. But we're also close to these relative equal highs inside of a bullish or inside of a bearish gap, right? So you need to wait until the setup gives you a good time to enter, which is when the draw on liquidity is no longer contested, right? At this point, we have taken previous day low, which means there's no good reason anymore for us to continue to sell down, at least before we take this very strong draw. So you need to make sure that you take liquidity in one direction and then target opposing in the other, okay? So that's why you need to understand the discretion behind the system. Like I said, this 4-step trading model, it's very useful, it's very helpful, it's like your ticket to your destination, but you need to have a destination in mind, clearly planned out in the first place before you even think about using this trading model, in my opinion, right? So that's it, sweep, tap, inversion, momentum. Now I want to talk about combines for a minute, because a lot of people kind of blow combines just almost like they don't care about them, and I've done that before too. I definitely get it. It's easy to just reset it, and depending on how much money you've made or where you're at in trading is a huge factor in this too. If you're a very experienced trader and you're consistently making payouts, you're probably fine just trying to full port your combines, trying to pass them very quickly, all that type of stuff, right? But I will say, if you're trading a 100K or 50K on Topstep, you need to understand that gambling twice to pass it, since you can't pass it in one day, so targeting, half your profit goal, is a very poor strategy mathematically. Why is that? Well, that's because on a 150K and a 100K, you need to pass by making 6K, and you can't lose 3K. On a 100K or on a 150K, you need to make 9K, and you can't lose 4,500. So that's very different from the 50Ks, where you only need 3K and you can lose 2K, right? You see why on the 50K, you only need to make 1.5 times your maximum loss limit. But on the 100 and 150K, you need to make double your maximum loss limit, which means those are statistically harder to pass. It doesn't matter if anyone says, oh, I'm better at passing 150K. No, like the math says, the stats say that it's more difficult to pass a 100 or 150K. And not to mention, they're also just more expensive, right? I paid almost $200 for this 150K that I just passed with no activation fees, right? It's a little cheaper if you do the activation fee route, but I had confidence that I could pass it. But once again, I'm not just going to get up there and go 1-to-1, 4,500 to either hit my max gain for one day, halfway to 9K, or lose the whole thing, right? It's a little easier to do that gambling auto quick pass style on a 50K, because you need less variance on your side. Or variance is more on your side, I guess I should say, if you're trying to just gamble auto pass a 50K. But if you're trying to pass a 150 or a 100K, you need to take it serious. And I honestly, I like trading my combines kind of like how I actually trade, right? I'll size aggressively when I see a good setup. I'll take it seriously. I'll treat it as if it's real, funded trading, because I don't want to have a different mentality. I want to keep my mentality the same whenever I'm trading, because then when I actually end up passing it, that helps me roll into the actual funded stage with the same mindset of be defensive when I need to be and be aggressive when it makes a lot of sense. But don't go degen and gamble it just because it's fun or whatever, right? That's the biggest thing I think with combines, especially the more pricey ones like 100Ks, 150Ks. And, even when you go a little more conservative, I just passed it in 2 weeks with minimal drawdown, with really minimal drawdown, as you guys saw by the screenshot, right? So it's not like it's going to take you months, because I also don't think you should take months, right? You should be trying to size to a point where you could realistically get it done within a few weeks, because you don't want to keep paying the recurring fee. And that's another mistake a lot of beginners make. But I see I see a lot of inexperienced traders. They're like on some extreme of this, right? They're either on the, I'm going to pass this in 2 or 3 days and I'm going to just full port and say, fuck it. And if I blow it, I'll get another one, right? And then there's the extreme of like, I'm going to size with 2 micros and hopefully pass this within the next 18 months. Like, come on, guys. Try to be somewhere in the middle, like I am, right? I try to be somewhere in the middle. I'm cool with passing it in 2 weeks, 3 weeks, maybe even a month, right? I'm cool with that. As long as I'm getting good progress, getting good reps, refining my edge, which you can still do while you're trading a combine. And I'm also trading this combine at the same time as I was trading my fundeds, right? I'd have tabs open on my funded futures and I'd have this tab open. So it's like, I have no reason to rush it. And I don't think you guys should either, but you also don't want to go at a snail's pace. So that's my message about combines. I hope this video helped you guys, 1, understand my model, 2, understand that you don't have to be a psycho and gamble away combines. You also don't have to be a scaredy cat and kind of just tiptoe around until you hopefully have something really go your way and then finally you pass after 4 months, right? Don't be either of those people. Be somewhere in the middle. Be aggressive with your sizing. Size up when you have conviction, but don't try to gamble it away and pass it in 2 days, because that will not build you good habits when you're actually funded. And if if you're a 7-figure payout person, 6-figure payout person watching this, and you gamble your combines because you make so much now and you just kind of want to keep cash flow going, okay, obviously disregard this. But if you are anywhere between intermediate and beginner, I would say you need to take combine seriously and approach it as if it's real trading, but also do it with size and aggression, which you can then roll over and build confidence with when you're funded. All right. So, with that being said, if you guys enjoyed the video, make sure to like and sub for more educational content, more trading recaps, all that type of stuff. And also make sure to join my free trading Discord. It'll be linked in the YouTube bio. And I appreciate you all for watching. I'll catch you in the next one. Peace.